Hello guys. We are here with another session of Short Metrics, the only channel in YouTube to bring you flavor, to teach you how to get out of the metrics and this race everyone is stuck in. So I hope you had a great weekend, sometime with your loved ones, with your friends, family, and hopefully you got ready mentally for another trading week of the financial markets. So I'm sure I am ready. I have my dog here sitting next to me, lying on the ground, so I turned on my air conditioner just so she won't leave the room. So yeah, I'm pretty happy with my Monday. Had a great weekend. So one thing before we get started, of course, we will talk about what is a pip in Forex trading. How can we calculate pips in Forex trading to make our own trades using the right lot size? And before we even get into it, please hop to the future, to the channel, Short Term Metrics. We are here to provide you with powerful insights about the trading industry and the financial markets, so you can exploit it and earn money. Um, so please hit the like button, hit the subscribe. If you guys have any topics you would like us to discuss about and elaborate, please give us a comment in the comment section and we will take care of you. But today we will talk about what is a PIP, how to calculate it, and actually how do we work with. Okay, so PIP, as you can see, is an acronym for present. Bon, let's write it down. PIP is an acronym um, for percentage in point or price interest point. Cool. Sorry for my English. Let's make it a bit smaller. Perfect. A pip is the smallest whole unit price move that an exchange rate can make based on Forex market convention. Okay, so most currency pairs are priced out to four decimal places and a single pip is in the last decimal place. A pip thus equivalent to one of 100 of 1% or 1 basis point. For example, the smallest whole unit move the USD CAD, as you can see here, um, can make is 0.0001 or 1 basis point, meaning 0.0001. That is a pip. Forex currency pairs are quoted in terms of pip, short for percentage in points. In practical terms, a pip is 100th of 1% and appears in the fourth decimal place. As you can see here, we have pips. Okay, you can see this is 20 pips. You can see it is written right here. This is 10 pips, this is 5 pips, and this is 1 pip. Um, and as you can see, while we have these numbers, the 1 pip, you can see the decimal places, decimal points. You see 3 zeros and then the number. So this is the 5 pips, 10 pips, and 20 pips. Perfect. So, understanding pips, as that's exactly what we're doing right here. A pip is a basic concept of foreign exchange, Forex, of course. Forex traders buy and sell a currency whose value is expressed in relation to another currency. Quotes for these Forex pairs appear as bid and ask spreads that are accurate to four decimal places. Movement in the exchange rate is measured by pips. Okay, as you can see, measured by pips. Here's a measurer. You can see 26.7 pips. When your Forex account is funded with US, I'm sorry, guys. I'm sorry. Movement in the exchange rate is measured by pips, as we said. Since most currency pairs are quoted in maximum of four decimal places, the smallest whole unit change for these pips is 1 pip. Um, for these pairs, of course. So, how do we calculate? Let's get into it. How do we calculate? Perfect. Let's get this out of here. So, the value of a pip depends on the currency pair, the exchange rate, and the trade value. When your Forex account is funded with US dollars and USD is the second of the pair, or the quote currency, of course, such as with the Euro USD pair, the PIP is fixed at 0.0001, as you can see right here. 0.0001. In this case, the value of 1 pip is calculated by multiplying the trade value or lot size by 0.0001. So, for the Euro USD pair, multiply a trade value of, say, 10,000 euros by 0. By 0.011, by this number, guys. This number, this is a boomer moment. Classic, classic. Okay, so how do we calculate it? Let's get into it. Let's get this done with. And without any further ado, let me introduce you with the calculator. So let's get it done. Perfect. So you guys can see. Oh, now you can see. We have this chart right here. Okay, you go to account balance. You write down your balance. Okay, let's just say you have $5,000. Perfect. You have $5,000, and then let me do it like this. It will be much more easier. Perfect. Okay, we have it. Okay, guys. So we have $5,000 per se. Okay, and let's just say I want to enter a position. What I'm going to do, I'm gonna go to that price point. Let me turn that off. I'm gonna go to that price point, and let's just say this is the setup I would like to take. Okay, something like this. I'm just like, this is for example. So, in order for me to control how much I'm going to lose if this trade goes against me, and then I can manage my risks, all I do is I look for the distance from the entry, right here, from the entry point. Whoa, when? Okay, from the entry point, and the distance all the way to my stop loss. I want to know the distance. So when I see this, I see 18.6 pips distance from my entry to my stop loss. Meaning, if the trade goes against me by 18.6 pips, I'm going to get out. And let's just say I want to lose $500, okay, when it hits my stop loss. So I'm going to risk 10%, or you can do it in my USD value and just risk $500. That's what I want. And we can see that the stop loss in pips is 18.6. Okay, that's perfect. But now we will calculate. Wow, okay, so now you know if your entry gets hit and you're in a trade, in order for you to hit the planned stop loss and only go out with $500 loss, you will need to use 3.55 lot size to do it. Okay? So this is what I want you to do. Go to cashbackforex.com, or you also have my FX book, which is also cool, but use this one, cashbackforex.com, and just try and look for calculating pips. Okay, I want to go short right here. So I will put my stop loss above the structure and will aim for this target, let's just say. Okay, so what's the distance from my entry to the stop loss? Is 15.9. I still want to lose $500 if it hits my stop, but what I'm changing is the pips from the stop. So now it says, Raz, go ahead and trade with 4.159 lot sizes. Okay, so perfect. What else? What else? Okay, one exception we have. One exception we have is the Japanese yen. Um, does the Japanese yen forex rate use pips? Because as you can see, there are no 4 decimal points. You will need to calculate it a bit differently. So yes, it does calculate using pips. However, the yen is an exception. A quote for the yen normally extends two decimal places past the decimal points, so a single whole unit pip is 0.01 rather than the 0.0001 for other currency pairs. So as you can see, guys, we have the decimal points, and after this we have two numbers, okay, which is 6 and 0, and you can interpret as 600. But yen is a bit different, but as you can see, you can go here. Of course, we are using the USD CAD lot size calculator, and then we will go to USD JPY, and we can calculate it as well. Guys, let's see. Let's say we enter long right here, stop loss is in here, and target, let's just say it's up here. It's not relevant. We have 33 pips distance. So let's write it down. And then it says, okay, use the lot size of 2. Guys, I hope this was helpful. I hope this helped you do helped you understand what a pip is and how to use it. Um, I'm very happy to be here helping you guys understand this. I hope this will help you to go on. And if you think I dropped something, if you think I missed something and you want me to touch up over it again and again, so please let me know in the comments below. Hit the like button, the subscribe, and let us know how we can get better to make you smarter and a better trader. Have a good one, guys. I had fun. See you in the next session. Bye bye.